You've probably seen the headlines: Seattle home prices dropping, inventory surging, buyers finally have leverage. And you're thinking, okay, so what does this actually mean for me? Is this a good time to buy? Is it not? What's really happening out there? I'm Scott Alfano, real estate agent in Seattle, loan officer across the country, and this is Signed and Funded. Today we're going to cut through the noise and talk about what the Seattle market is actually doing right now. If you've been listening since episode 1, you now have some of the foundation. You understand how buying and financing work together, you know how your credit score affects your rate, and you know how to figure out a real affordability number, not just the max number the bank will approve you for. Today, we're going to layer in something that a lot of buyers skip entirely, and it costs them. And that's a real grounded understanding of the market they're actually buying into. Because here's the thing. A lot of people treat the market like background noise. They hear the headlines, they feel vaguely anxious or vaguely optimistic, and then they just start looking at houses. But understanding what the market is doing right now changes how you think about your offer, your timing, your negotiating position, all of it. So let's talk about Seattle, what the numbers say, what they actually mean, and how you should think about this market as a buyer or a seller in 2026. Let's start with the headline version of the Seattle market, and then I'll tell you what's actually going on underneath it. Headline: Seattle home prices are dropping, inventory is surging, buyers have leverage. Now here's the real version of each of those things. Prices. The median sales price for a Seattle home right now is around $850,000. Depending on which data source you're looking at, that's down somewhere between 1 and 2% from a year ago. So yes, technically that is down, but let's put it in context. We're talking about a market that was sitting at record highs after years of pandemic-era appreciation. A 1 to 2% pullback isn't a crash. It isn't really even a correction. It's a small pause. Single-family homes in particular have held up remarkably well. That segment is basically flat to slightly up year over year. Where you're seeing the softness is primarily in condos, which are down around 6%. So when someone says Seattle prices are falling, that's technically true in aggregate, but it's really a condo story more than a single-family story, and those are two very different markets. Inventory. Yes, inventory is up significantly. Active listings are up somewhere around 23 to 36% year over year, depending on the data source in the segment that you're looking at. On the east side, Bellevue, Kirkland, Redmond, listings are up nearly 50%. That is a huge number. But here's the thing about inventory. More inventory doesn't automatically mean buyers are in control. It means buyers have more options, and there's a difference. The homes that are priced right in the right neighborhoods are still moving. Well-presented homes in North Seattle, Wedgwood, Maple Leaf, Roosevelt are still seeing steady demand. Queen Anne and Magnolia, same story. The market isn't falling apart. It's becoming more selective. Days on market. Homes are sitting longer than they were a year or two ago. We're seeing around 21 days on average right now versus closer to 10 days a year ago. That is a pretty meaningful shift. When a home was going under contract in 7 days last year, you had almost no time to think. At 21 days, you have some breathing room. But 21 days is still not a slow market. In a true buyer's market, you're looking at 60, 70, 90 days. Seattle is not there, not even close. And mortgage rates. This is the one that's really driving everything. Rates are in the mid 6% range right now. They did briefly dip below 6%, and that didn't do very much to move the needle on sales. And that realistically, that tells you something. Even when rates are nudged down, buyers were still cautious. There's economic uncertainty in the air, and buyers are being deliberate. They're not panic buying, and they're not sitting completely on the sidelines. They're being careful, and that's a smart market. So, based on everything I just said, if I had to describe the Seattle market right now in one sentence, I'd say it's a rebalancing market, not a buyer's market, not a seller's market. A seller's market is when demand crushes supply. Homes get multiple offers, they go over asking, they sell in days. We had that here for years. That was Seattle for most of the pandemic era. A buyer's market is the opposite. Inventory piles up, homes sit for months, sellers are cutting prices aggressively just to get people in the door. We're in neither of those right now. And honestly, this is a pretty interesting time to be a buyer if you understand how to move in it. Here's what a rebalancing market looks like in practice. The homes that are priced correctly and well prepared are still selling, and they're selling relatively quickly. A properly priced, well-presented home in a desirable Seattle neighborhood is not sitting for 6 months. But the homes that are overpriced, that have deferred maintenance, that are in the wrong price tier or the wrong product type, those are sitting. And they're giving the inventory is surging headlines because they're just stacking up. There's also something called the lock-in effect that's been suppressing the number of available homes for a while now. A lot of homeowners bought or refinanced when rates were in the 2s and 3s. If they sell today, they're trading a 3% mortgage for a 6.5% mortgage. A lot of people just really aren't willing to do that, so they're staying put. This means the supply that's coming to market tends to either be new construction, investors exiting positions, or people who have a real reason to move, job relocation, life change, whatever. The casual or optional sellers have largely sat out. What that means for you as a buyer, you're going to get more selection than you had 2 years ago. You have more time to make decisions, and you've been getting a little bit more negotiating room, especially on homes that have been sitting. You're not getting fire sales, though. The market's not panicking. The fundamentals here are still strong. Seattle's economy, the tech sector, the job market is resilient. That's not going to disappear overnight. Prices aren't going to fall 30%. That's just not the scenario in the city that we live in. And here's something worth saying plainly. The people who are waiting for rates to drop back to 3% before they buy are probably going to be waiting a very, very long time. And when rates do drop meaningfully, all that pent-up demand is going to come rushing back into the market at the exact same time, and the prices are going to move. The window where you have a little bit more breathing room, where you have a little bit more negotiating power, is right now. All right, so what do we actually do with all this information? If you're a buyer, here's how I'd frame your approach in this market. First, don't let the headlines paralyze you. The market is not a disaster, and it's not a slam dunk. It's workable. You can find good homes, you can negotiate, and you can close at a number that makes sense for your financial picture. But you still have to be prepared. The homes that are still getting multiple offers, and a lot of those still do exist right now, are going to the buyers who are pre-approved, who know their number, and who can move quickly when they find the right one. If you're still browsing Zillow without a pre-approval letter in hand, you're not a real buyer yet. You're the window shopper. Secondly, understand the neighborhood level story, not just the citywide number. Seattle is not one market. North Seattle is different from the Central District, which is different from West Seattle, which is different from the East Side. Condos in Capitol Hill are behaving very differently than single-family homes in Maple Leaf. If you're working with a good agent, they should be walking you through the micro-market dynamics of the specific areas you're targeting, not just quoting you a citywide median. Thirdly, use the inventory to your advantage strategically. If a home has been on the market for 30, 40, 50 days, there's probably a conversation to be had. Maybe it's overpriced. Maybe there was something that came up in early showings. Maybe it's just been slow. But a seller who's been sitting for 6 weeks is in a different mindset than a seller who listed 3 days ago. Understand where you are in that spectrum. Now, if you're a seller, this is not the time to overprice and hope. The buyers out there right now are smart and they are patient. They've been watching the market. They know what things are worth. And if you come in at a number that isn't supported by comps, you're going to sit. And the longer you sit, the more leverage shifts to the buyer. The homes that are succeeding right now are the ones where the pricing is honest, the presentation is sharp, and the seller has a realistic expectation of what the market will bear. Spring is historically the most active time in Seattle real estate, and we're heading into that window right now. New listings are coming to market, buyer activity is picking up. If you've been thinking about listing, the timing is actually pretty good right now, as long as you go in with the right price and the right preparation. And if you're an investor, that's a conversation for a later episode in this season, because the investor calculus is different. We're going to spend a lot of time on that in the near future. I want to leave you with one framework for reading this market, or honestly any market, when you start seeing conflicting headlines and conflicting data. Ask 3 questions. 1, what is the median price doing and why? Is it going up because demand is strong? Is it going down because a specific segment is soft? Or is it basically flat because things are in a holding pattern? 2, what is inventory doing relative to sales? More inventory alone doesn't tell you who has leverage. You need to look at both sides. If inventory is up 30%, but sales are only down 10%, that market is able to absorb the inventory. If inventory is up 30% and sales are down 30%, that's a different story. 3. How long are homes sitting? Days on market is one of the purest signals in real estate. Under 30 days, sellers still have the upper hand. 30 to 60, it's pretty balanced. Over 60, buyers have real leverage. Right now in Seattle, as I mentioned earlier, we're around 21 days on average. That is still a healthy, active market, more balanced than in 2021 and 2022. More negotiable, but not a buyer's paradise. Run those 3 questions on any market you're evaluating, and you'll have a much clearer picture than the headlines give you. If this episode gave you a clearer picture of what's actually happening in Seattle real estate right now, I'd really appreciate it if you'd share it with somebody who could use it. A friend who's thinking about buying, a family member who's been waiting on the sidelines, anyone who's been trying to make sense of the market from the headlines. That's literally how this show grows, one conversation at a time. And if you have questions about the Seattle market, specific neighborhoods, what's happening with condos, what to look for on the east side, send them my way. I read everything. And you can find me on Instagram at signedandfunded. Next week on Signed and Funded, we're going to get into pre-approval. What it is, what it isn't, and why you don't want to make an offer on a home without one. It's one of the most misunderstood steps in the whole process, and we are going to clear it up. Thanks for listening to Signed and Funded. I'm Scott Alfano. New episodes drop every week, one topic at a time, so you always know exactly what you're getting. Until next time, go make a good move.